Hello and welcome back. Let's check on commodities now, where we have seen a bit of a turnaround coming in since the European markets have opened. Still under pressure, still all those multi-month lows, but on your screens you can see the gold prices are up nearly $6, 0.5% of a gain coming in for the international markets. The Indian markets also have seen some support coming in. Let's get in then. Prithviraj Kothari, he's MD RiddiSiddhi Bullion, and he joins us on a Mumbai phone line. Mr. Kothari, hi, welcome to the show. The kind of runoff decline that we have seen in gold prices still since the Fed announcement, how have you read that, and what kind of supports are you expecting in gold prices now?
I think gold, if you see the mines, the costing of a cash cost is around $1,250 to $1,270. If I think it's below $1,250, so I think the cut on the mine production. So I'm worried about that. If the mine production is cut down, that there will be again the chances of gold. But still, the ETF liquidation is still there. The still market on the nervous side, but rupee depreciation is still there. So in terms of rupee prices, they're still too high.
Mr. Kothari, most of the international biggies have talked about $1,200, even $1,000 an ounce on the lower side in case of gold prices. How would you look at those levels?
I think it's still the US dollar is going the higher side. So I think it's still the pressure is there, but it's still 1,250 is the cash cost. I don't think so it's go below the 1,200 level. But maybe possible of a chances because the huge selling is still there, the ETF liquidation is there. And also the Indian now, Indian policies are changes. The Indian buying are very low. The demand is very low because of June and July. There is no festival and the marriage season is there. The policies are the changes. So I think on some pressure on still on the downside. Maybe 1,200 or 1,230 possible.
Mr. Kothari, how are you reading into lots of curbs that are coming in from government and self-coming curbs as GJF or perhaps Reliance Capital have brought in as well in the markets? How do you read that into the consumer psyche?
No, the government policy change that it's only allow gold to in the DP basis, but it's not a clear. The RBI says it's a DP basis, but customs said that if you have paid the customs duty as well as you have to show the swift copy of the remittance also. So I think when the policy clear, but there is a very slack of demand in India. So I think now the policy should be some clearness is coming. Then after the consignment should be coming. Still, there is very low consignment coming in India.
But with the KYC norms, PAN details, and all of that coming into the markets, do you think it's slightly, getting difficult for a consumer to go out and buy gold, perhaps?
Yeah, I think so. It's difficult. But if you see the most of the 70-75% are gold buying from the rural areas. So how they can give the details and everything else. Unless if you see the city side, there is everywhere is the KYC. We are first doing the KYC, then we doing the business. So in the city it's okay, but if it's very difficult in the rural area, they don't have any PAN card, they don't have any bank accounts.
All right, Mr. Kothari, we'll let you go at that. Thank you so much for joining us. That's a view coming in from RSBL, really, that prices cannot decline much further from here because they are nearing their cost of production. Let's get in then. Biren Vakil, he's